Hey everyone, Mortgage Nerd here. I want to use two R words today. Well, one is a compound word, I guess. Reverse mortgages and recessions. The last recession, 2008, I started offering reverse mortgages. Guess what? The demand for the reverse mortgage was sky high because people didn't have money, they needed money. The supply, everything in economics is supply and demand. The supply was way down. Why? Because values were dropping. So there was a lot of people trying to do the reverse mortgage and a lot of people that couldn't do the reverse mortgage because they didn't have enough equity in their home. So what is the reverse mortgage? It's for people 62 and over. They're able to access the equity in their home to live better through retirement. Whether they take out a lump sum, take out a line of credit, take out monthly payments. It's not free money. It's a loan from a bank. It's insured and regulated by FHA. There are some private ones. Instead of the person 62 and over taking the money out of their pocket every month and sending it to the bank that they would on a regular mortgage, they're not going to make monthly payments. It's not free money. They're just not making that payment. So the money they've borrowed, which has an interest rate because it's a loan, it's a mortgage, that interest they're not paying adds on to their loan amount. So let's just use an example. Let's say the interest rate is 4%, APR 4.2, whatever. I have to say that. So 4% is what they're actually charged on $100,000 a year. In 1 year, they're going to owe 104. In 2 years, add 4% more. And 3 years, add 4% more, etc. That is how it works. If someone needs money to get through retirement, to get through this recession, to not have to rely on their portfolio of stocks and bonds and mutual funds that's losing money now, stop touching that. Go for the reverse mortgage. Use those funds. Live a better life. Buy college plans for your grandkids. Whatever you want to do, it's your money. Use it while you're alive and you're living in the home. The home you put all this money into, your money, not your kids' money. When I did the reverse mortgage for my grandparents, my tia and tío, aunt and uncle, we were like, abuela and abuelo, mom and dad, please, that money's yours. Use it as you see fit. We don't need your money. We still inherited the property and inherited a small inheritance. It doesn't matter. They use their money in their final years as best possible. My grandfather loved taking the family out to lunch and stuff like that, especially on anniversaries, and they weren't doing it because they didn't have enough money coming in. After the reverse mortgage, we were going out, he spent $1,000 with a huge family. He loved it. It was what he loved to do. And he couldn't do it if he didn't do the reverse mortgage. Reverse mortgages and recession go hand in hand. Need, demand. This time, the demand is going up and the supply is still there. Take advantage. Let me talk to anybody that you know at 62 and over. I'd be happy to help. Phil Stevenson, Mortgage Nerd. Thanks.